Ethereum is absolutely screwed. After an initial rally where everybody got excited about the treasury companies and the purchases through the Ethereum ETFs, we now see all of that excitement waning. We see how people are taking profit, and now Ethereum tends to underperform the rest of crypto. The question is, how much longer can this underperformance last? Does it potentially make sense to buy the dip now? Let's have a look at the data most people aren't considering. Let's look at relative valuation charts. Let's look at on-chain metrics. Now here is what started the initial excitement around Ethereum. The purchases through new public companies, spearheaded by Tom Lean's BitMine. But have a look at how much this slowed down recently. We barely saw any purchases in the last 3 weeks. Here's the Ethereum balance in the exchange traded funds and the ETFs. We got a slight uptick 1 week ago, but again, since then, no more acquisition. Now, usually we would expect that if there's no more purchases, that the price simply just stabilizes, that maybe the Ethereum dominance stays where it is, that Ethereum stays a constant part of all of crypto. But that's actually not true. Ethereum is losing relevance. We went from 14.6% Ethereum dominance down to currently 12.8% dominance. And if the trend continues, we could potentially see Ethereum underperform by another 45% from here. Now, I'm trying to be as objective as possible on this channel. I invite you to check out other influencers. What did they say about Ethereum at different points in time? Because most people are always just very bullish on the asset. But that's of course a problem during a bear market like this, where Ethereum underperformed by 66%. Now, we anticipated the bounce in the middle of April. And that was because we lined up with the bottom of September of 2019. Check out the prior videos on this channel. Here's a video published in April, a historical chance to buy Ethereum. Here's another one also in April. People are sleeping on Ethereum. And both of those videos got a lot of views. They got many more views compared to the average video on this channel. So I hope that you took advantage of this buying opportunity as well at the time. Now, being bullish or talking positively about an asset is always easy on YouTube. It gets the thumbs up, it gets the support, everybody is happy. But doing the opposite and ringing the alarm bells, that's much harder. Here, in June 2024, we talked about the potential disaster. Because at that point, the Ethereum ETF inflows slowed down massively. And that then led to a major sell-off in ETH. Now, you're already seeing from the beginning of this video that I don't like to discuss any US dollar valuations. So I'm not talking about Ethereum hitting $5,000 or $10,000 or even just $1,000. I'm always talking about relative performance to the rest of crypto, relative performance to Bitcoin and to Solana, etc. The reason for that is that there are two major factors that influence prices. There is the general macro, as in money flowing in and out of crypto. That's why we see all of the correlation within crypto, right? When Bitcoin goes up, then all the altcoins go up as well. When Bitcoin crashes, all the altcoins come with it. So there's in general a lot of risk on and risk off movements simply by people injecting and withdrawing capital from the space. But then as a second factor, there is the idiosyncratic movements. And that's really what matters in the end. How does an asset perform relative to the rest of the space? Because in the end, it's all about opportunity cost. Is it worth getting into Bitcoin more or into Ethereum more? So let's start with that most straightforward comparison. This is ETH relative to Bitcoin. Again, we've got a trading range and at a market cap ratio of roughly 0.25. So in Bitcoin is 4 times the market cap of Ethereum. We've got our resistance that we bounced off several times and that we are now also using as a turnaround point. The pricing of most altcoins actually does not happen in US dollars. It happens in relation to Ethereum. Have a look at this overview of trending altcoins on the Ethereum chain. Most of those altcoins are traded versus wrapped Ethereum. They are not traded versus the US dollar. So it's the ratio between wrapped Ethereum and the altcoin that determines the price. When Ethereum goes down by 10% in US dollars, then automatically, without a single trade ever happening on the chain, the altcoin also goes down by 10%. This is true for the Ethereum chain. It's also true for all the layer 2s like Base or Arbitrum or Optimism, etc. And because of that direct coupling in the liquidity pools, we've got this strong correlation of Ethereum to the altcoins. The correlation between Ethereum and the altcoins is actually higher compared to the correlation with Bitcoin and the altcoins. What we see in green is the Ethereum market cap. What we see in white, that's the market cap of the altcoins that are not in the top 10. And just have a look at how much they move in tandem. When Ethereum is going up, the altcoins go up. When Ethereum is going down, the altcoins go down. So if you're actually bearish on the Ethereum dominance, if we think that Ethereum is likely going to continue to go down, then the altcoins will very likely go with it. And so we see an interesting trading range between Ethereum and the altcoins. So this is now the ETH market cap relative to the altcoin market cap. When this is very low, then people have swapped into the alts. When this is very high, then people have swapped into Ethereum. Now we saw Ethereum initially underperforming after the sell-off post-merge, and then subsequently outperforming once we saw all the inflows through the treasury companies and through the ETFs. But since now those inflows are slowing down significantly, people are taking profit in ETH. And so the altcoins, relatively speaking, outperform. But just because they outperform doesn't mean that they go up in price. They simply just lose less. Because again, when we look at the altcoin market cap, that's actually currently also coming down. Simply not as quickly as Ethereum's market cap, but there is a coupling. And so total 3, which is the denominator here, that's a measure of the altcoins that are not in the top 10. What is included in this measure though is the stable coins. If we remove the stable coins from that measure, we get this ratio. So this is Ethereum relative to the altcoins, except the stable coins. And again, it gives us a picture that there's very likely going to be more pain ahead for Ethereum. Ethereum could underperform even the altcoins by more than 45%. Now, some people say that this time is different because this time Wall Street buys Ethereum. Maybe not at a constant rate, maybe there is a short-term break, but in general, they are buying. I don't think that that's enough of an argument that Ethereum can't fall further from here, because we have seen Bitcoin bear markets even while Michael Saylor from MicroStrategy continued buying into Bitcoin. So have a look at this. This is the Bitcoin Treasury Company balance. That's the colored area. And at the top, we've got the Bitcoin price. And Bitcoin did fall from 69K all the way to 17K. While in general, Wall Street continued to buy into Bitcoin. So just because we've now got the institutional investors accumulating the asset does not mean that the asset can't go down. It does not mean that there are no more bear markets. Volatility is real, and volatility can hit Ethereum as well. And I think it will. The market is getting cautious again. We can also see this in Solana dominance. It tends to go down now. Solana tends to be even more risky than Bitcoin and Ethereum. And Bitcoin dominance tends to do the turnaround. It tends to now go up again. And I believe that we will only see a real altcoin season once BTC dominance is close to 73% again. This is where in the past we saw the turnaround, where subsequently Bitcoin dominance crashed and then the altcoins made the race. Ethereum has run its course. Now it's time to get into Bitcoin again. At least that's how I'm personally setting myself up. The Bitcoin purchases are much more constant compared to the Ethereum purchases. And it's just reasonable that at some point people are taking profit after Ethereum has outperformed the rest of the crypto market by more than 100% in the span of just a few months. Now here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of pump.fund traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like Pump.fun tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost average into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very, very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient, but it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. It just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why ApeCoin did so poorly. The supply increased over time massively, and the early insiders at the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to ApeCoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since ApeCoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here, but long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those 2 videos in total amount to roughly 1 hour of content. After you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those 2 videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you will just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the 2 that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.